Good morning, guys. Welcome to this Thursday, January 23rd. So yesterday we were on the upside, down in the overnight we're on the downside, pulling back a little bit. So far, nothing crazy. Looks more like a reverse retest of support, but so far definitely a weak overnight. After a pretty good yesterday's overnight and day session was pretty much to the upside. So that's how we get going this morning. News for today, financial news. At 8:30 we get jobless claims. We have a nat gas report at 10:30. 11 o'clock we get Kansas City Fed manufacturing index at 11 o'clock. Noon we get an oil report. And then at 1 o'clock, we have a tips auction. So we have two energy reports, jobless claims, and then the Kansas City Fed coming out. So it's kind of trickle out. So 8:30, 10:30, 11, 12, and 1. So that's what you got. That's what we have on tap. Now, I don't think any of that, again, is going to really drive the market. It's all the cross currents out there with new policy directives and stuff, or whatever comes out of the White House is driving the market. Not necessarily driving the market, but creating cross currents. So I mean, they had this big announcement on the on the AI data center in the market. Or some stocks that's went haywire, drove the market up. And today, that's just some little bit of profit taking, I guess, going on with that, and a little bit to the downside. But that is what we can expect: volatility and a lot of cross currents. But overall, the outlook for the economy is going to be to the upside. It doesn't mean everything's going to go straight up. It just means it's going to be net to the upside. Remember, we always get a few really good pullbacks throughout the market, but just more market technicals than anything else. One big hurdle, which we haven't spoken about it for a while, is all this debt which needs to be refinanced, and it's going to be refinanced at the higher rates, and that's all handed over from Yellen with a big bow on top to the new Treasury Secretary to deal with. So we have a lot of stuff happening in the economy that has to be sorted out, but we will see. At this point, though, looking at the structure, looking at the market, I would start off still from the long side of the market. We are down here reverse retesting that edge, the 6100s. That's where we are right now, 6100s. So far that's holding. I would include the 90s as well. So both of these support areas. So looking to buy against the 6100s and the 6090s. Rotations back up. If they take out the 90s, I think they're heading back down into this lower range. I'll take off the long bias. And not going to worry about the short side until the 40s comes out. If they, for some reason, retrace more than that and take out that 40 level, starts trading back into this lower range, that's when I start thinking about, okay, maybe the short side, but the bears is going to drive this a little bit lower. But at this point, we have two pretty good support areas to bust through before we have to worry about the bears taking charge of this market. So looking to buy weakness still against the 6100, 6090s for rotations back up. On the way up, a little bit more to lean against this 6130s. So a short opportunity here at the 6115s. I'm not going to be very aggressive on that one. The 6130 to 35s, probably a better short right here. That looks definitely like an edge formed right there. It's against this little high volume area. We also have the 45s and the 55 to 60s, these upper areas, but these are pretty light, so I would not be. I would take those with a grain of salt. But at this point from yesterday, we have at least an edge to lean, near-term edge at the 35s here to lean against. So that could be a short setup against that one, but we are leaning towards the long side of the market to get started. So I'm not going to be not going to be super aggressive on any of these short setups. Looking for a decent setup and a trigger before I look for a bigger short. All right, so that's kind of how we get started on the ES. Let's see how this one is going to go. Remember, we're also in earnings season. There could be earnings coming out any day. I haven't been checking that, to be honest with you. So just see how the market reacts to it. But I think American Airlines reported this morning, and they were pretty good. So overall, the earnings this so far has been pretty good. Banks has been doing great. American came out pretty good. So It looked like the earnings season, fourth quarter was pretty good. Looking at the bonds and the Nasdaq bond market a little bit to the downside. They took out the 113, 113s and they're back in the 112s now. So looking at the so we're backing off this attractor. And I folded this whole thing together. You can see we have a small attractor at 113. We have one here at 112. We have one here at 111. So those are the bucks are exactly the attractor areas. And unless they start taking out the 110, 110, 20 to 111s, I'm not going to worry about the bond market really falling out of bed. They looks like they're still trying to take it lower though. So we had a little bit of strength going on here for a bit. Now they're starting to creep lower. So maybe yields are going to be slowly creeping up over time here. So we'll find out. But at this point, I will start off range bound for the intraday session, looking for a slight short bias and see if they can take this lower. And the next attractor down is going to be at the 112s here. So we'll see where they're going to go. But they took out the 113, so looking for moves to the downside at this point. So looking to sell 113s and 113.08s for rotations back down, but above 08, take off that short bias and go back range bound again. So let's see if we get continuation on this overnight, or maybe this is it. So they took out my support area with a tick right now. The 23 had 25, it went out to 24, and then it stopped. We'll see how that develops. But if the bond market keeps trading lower, that's going to impact yields, and that's not going to be a great sign. And you can see we have a net selling going on. Nice little angle to the downside here. On the Nasdaq though, Nasdaq is also pulling back pretty good. Yesterday was a pretty good day to right up here to the 22,080s. Today we're taking out the low of that session and heading back down to the downside, and this one got tweaked. Okay, I need to stretch that guy a little bit. So let me do this. I wanted to do that, and then move it up just a tad, a little bit like so. There you go. That's better. So we are down against the this area of support, the 21,800s, and that volume edge. Now you said there was resistance started all the way from the 21.7 up to the 800s. Maybe we're trading higher. Now when we are heading down towards this area, you're going to start to getting resistance at the 850s or so, down to the probably 750 or 700s. So a pretty good area, about 100, 150 points of resistance. And we could find any edge in between here could potentially hold. But I'm going to be looking to buy weakness still for rotations back up, looking for a failure to take out this lower edge. So looking to buy against the 850s and the 780s for rotations back up again. There could be an edge in between here as well. I didn't have anything really good to lean against, so I kind of left it. But at this point, the obvious ones are 860 here and the 780s for rotations back up. Could be down here at the 730s as well. But I would say if they take out the 730s, we are definitely on our way down in this lower range again. So look to take off to a long bias if they take out the 780s. The next level, one level outside the obvious, would be down at the 730s for rotations back up again. So looking for buying opportunities, and let's see if they can turn this around and start trading higher. On the way up, definitely have a potential edge here now at the 22,100s. So that is right now the edge is at 80, but I would say the 100s is pretty darn close to where it needs to be. So that is this ledge right there, 4-letter ledge. We are right up against it on the high of yesterday. That is kind of the edge which they're going to have to take out next. So on the way up, not going to be super aggressive on the short side, but they could be short setups. I mean, the session highs here at the 960, 980s. You had a mode of yesterday against the 22,000s, and of course the 85 to 22,100s. is potential short setups against those. And it is going to be volatile for sure. I mean, you can see, I mean, how much they yesterday's before they closed, they pulled back a little bit, and then yes, the overnight just kept going. So late in the session weakness, not usually a great sign, but it's at this point I'm chucking that up to volatility at this point. But watch that, below that 730 level, I think we have bets are off at that point, and then they're pulling back harder than they should be for yes, the reverse retest. So that's how we get started. ES and Nasdaq both looking to buy weakness. Let's see if they can turn this around, and we know when to change our bias if they don't. On the way up, just be less aggressive on the resistance areas, since we don't have enough, or not a whole lot of volume to lean against on at these price levels. Finally, oil and gold. So oil not doing much. They're still holding around 75. That's giving me heartburn so far. Not much. I mean, you can see how the structure is starting to drift to the downside here. Support pretty good at 75. It seems to be. If they take it out, probably have a good shot at running it down to the 73.30 here. That the tractor, maybe even down testing that 72.60 or low volume area. And that likely stall the market at least the first time to it. So we'll see how this pans out. But I mean, as I keep saying, pressure is going to be to the downside. That is the overall trajectory of energy prices, no matter what you do. I mean, they're going to have to be something pretty significant for oil prices to start spiking. You know, it had to be something pretty intense happening in the world. But at this point, policy-wise, drill baby drill, oil prices are going to come down. It's going to start getting reflected in futures prices as well. So the trajectory is to the downside. But as you can tell, it's not just to sell it. They have also little rallies back and forth, and they run it back and forth pretty hard. So look for early strength. Look to get short for rotations back down. That's the way I would look at it. And then let's see if they can take it lower. So looking to sell again 75, 75, 76.10, 76.30 to 40s. At these three levels. If they start trading above 76.30s, take off the short bias and go back range bound, maybe even lean in on the long side if they're going to make a little rally out of it, you know. If they take out support at 75, we may have a shot at running it down to the next level, little high volume area here at the 74s. So at that point, we take that out with a bit of conviction, maybe try a short trade, but always trade location is key. Getting in on the when it starts breaking lower, it doesn't give you a lot of room to go anywhere, but sometimes that's what you have to do. So that doesn't make it easy to trade oil at all at this point. A fair amount of cross currents going on in that market. And then looking at the gold, they're right back down to the tractor point. So yesterday we had a pretty good move up here. We are at this volume attractor at 27.50. They traded up in the overnight. The day session held. Now in the overnight, yes, finally just busted through it and just headed right back down to value. So chances are now that we may see a test of these lower edges, or just stay range bound around 27.50. So I would start off range bound. I would start with a slight bias to the downside to see if they can retest these support areas, the 42s, the 37s, the 29s, rotations back up again. If they start taking out the 22, 23s down here, then I think we are heading back down again towards the to 22, 20, this basically this little area right here. If they take out that ledge, I think they can retrace all the way back down to 26.70. So we'll see where they're going to go. But at this point, you can see that a pretty good move to the downside. And unless they stall right here in support, in this support edge, we can certainly start retracing this pretty good. So gold, potential short opportunity on that one, but if support holds, look for rotation back to that value at 27.50. And I would say support 20 down to the 29s, looking to buy against those. Below that, a little bit less aggressive, below 22. I think we are heading lower at that point. All right, so that's the levels. Slight bias to the downside on gold. Oil, same story there. Back to the ES, and both ES and Nasdaq right now at least. looking to buy weakness. Let's see if they are going to be able to hold support here, but we know when to change our bias if they keep going lower. All right, so that is how we get started this morning, at least a starting point already. So I'm going to wrap it there. Good trading, guys, and watch out for cross currents. It's gonna be plenty of them. Alrighty, guys. Good trading, and I'll see you back at 11:30.